Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me, as always, for the monthly Registered Investment Advisor Update is Chris Engelbart, the Managing Director over at Byrne Wealth Management. Chris, as always, thank you for joining me at MarketSite.
Thanks for having me.
Three important segments coming up today. For the first one, we're going to kick it off dealing with clients that require a little extra help, and this is great timing for anyone and something that you need to have the conversation about. And let's talk about involving the power of attorney.
Yeah, Jill, what's happening now is that RIAs are beginning to find that the traditional way they interact with their clients are changing. So, for example, we just had an elderly client, 85 years old, no longer able to handle her affairs, and so her power of attorney, which happened to be her son, had to take over for her. It's a whole different ball game, and RIAs have to understand that there are different things you have to do. You've got to involve the power of attorney early on. You've got to get to know them. You have to understand where they're coming from. A lot of times they're overwhelmed because, you know, everybody names a power of attorney, but until it actually has to be used, sometimes it can be a daunting task.
How important is it to manage important documents?
Oh, very. So what we do in our practice is we try to keep everything on the cloud. We interact with both the CPAs and also the estate planning attorneys to make sure we have copies of all the wills, trust, and the power of attorney itself. We try to help our clients by saying, listen, we've got all this stuff on the cloud, so if you ever need to get it to somebody, obviously with your permission, we could do it. So again, it's important to have it so you understand as a registered investment advisor who the players are, who's authorized to do things, and who's not.
All right, and most importantly, documentation is critical. What about recording the minutes or keeping track of the talking points that you went through?
Yeah, we haven't gone that far, but what we do find very valuable is to make sure that we have minutes of the meeting. So, for example, we just had a meeting with a power of attorney last month. We had the CPA on, and we also had the estate planning attorney on, and we talked about things as far as spending needs, how much this particular person was going to need in the facility that they were in, and everybody had some action items that they had to do. And what's very good and helps is that after you're done with it, you circulate those action items, and you can kind of prod some of the other professionals if they're not following up like they should. Most of them do very, very well, but again, it keeps everybody on the same page, and it really helps the client.
All right, moving along to the second segment with RIA best practices, social media. I would imagine that a good social media strategy is as important to RIAs as it is to every other vertical.
Without question. You know, the point that I try to make about social media is you've got to be everywhere with everything. So different generations interact with different social media platforms, and if you're an RIA firm, what you really got to focus on is all of those platforms. For example, you may have professionals that are clients. They're going to be mainly on LinkedIn. Our older clients are on Facebook. You know, that seems to be their social media platform of choice. And then finally, there's Twitter. You have to have a Twitter presence. You can't just, you know, delineate and say we're only going to do this or only going to do that. You've got to tie all the different social media platforms together, because in the end, you want to be able to have people find you and hear your message as well.
How about email campaigns? Are they still relevant?
They are, but to be honest with you, what we really do with our email campaigns is to reiterate the social media platforms. So, for example, if you know, we're doing our monthly series, we make sure it goes out on social media, but also on an email campaign to let people, because people still read their emails. But again, for emails, it's very important to have a good headline in the email, because I don't know about you, but many times many people delete their emails without even reading them. But it still is relevant.
All right, and do you hire a professional for social media strategy?
Absolutely. I think it's very important. They give you a little bit different perspective. You got to remember, we're running an investment practice. We're managing our clients. We can't really spend a lot of time on social media ourselves. So I think it's very important. I mean, a lot of the marketing people that may be watching this will be glad to hear me say that, but I think RIA firms, unfortunately, don't spend the money, and it's very important to spend the money, because that way the content is always fresh, it's always relevant. I may get an idea, I push it out to the company that's handling our social media, and they get it online right away, rather than me saying, wait a minute, I got to do it, you know, after I have 2 or 3 client meetings, or, you know, review a portfolio or something like that.
So it's great to have a fresh set of eyes for fresh ideas as well.
Yes, very well.
All right, let's do the market review. Our final third segment, S&P 500. Has anything changed since the first quarter?
It has a little bit, from the standpoint that if you've noticed, we are not you know, making higher highs like we did last year. Last year was characterized by a one-way market with very little volatility. This year we peaked in January. We had a sell-off, and now we've made a series of lower highs. The S&P 500 is really beginning to look kind of like a triangle pattern. Typically, when you have a triangle pattern, the first break is usually not the intermediate term break. It'll be very interesting to see if the lows hold. So far, they've had. But again, the S&P has this descending triangle pattern, which is a little unusual at this point.
Are you surprised to see how sensitive the market is to headlines?
Yes, I think what's happening right now is that we've moved past, obviously, earnings season, and we're in headlines, no man's lands, I call it. But basically, what's happening is investors are trying to grasp for what the next theme is. Whether it has to do with the economy or whether it has to do with trade, and so they're struggling to catch which areas or which asset classes they should be in.
All right, let's look at the Nasdaq comp. Now, tech had a little bit of a rough ride over the past month or two, but we're seeing that participation back in the market again.
Yeah. That trade has also shown volatility. It's really a kind of a sideways pattern, which I think is very interesting. The leaders seem to be changing a little bit. You have some of the major FANG stocks have a rough 2 or 3 weeks, and all of a sudden another FANG stock pulls up. So it looks as more, it's a very choppy sideways pattern is what's really happening right now.
Well, it's good for the stock pickers because if they're not all trading in tandem and they're not as highly correlated as they used to be,
Right.
It's been an interesting stock pickers market. Let's move along to the Russell 2000. This index just continues to hit new highs.
Yeah, to me, this was the biggest surprise for the year. And I think what's happening is the tax cuts are trickling down to these particular companies. If you look, they're going to have the biggest impact with the new tax cuts, and that seems to be the theme right now. Very surprising that the Russell 2000 has made new all-time highs when you see the large cap stocks are really struggling or trading sideways. So I think it's something to watch.
Well, I also think that the larger cap stocks, they're also getting some tricky headlines around it because the tax cuts are leading to more stock buybacks and not necessarily the R&D. And so they were looking for the pass down with that. But it is interesting to see how the Russell's performing. Now, the 10-year, that's been another big story for 2018.
Another huge story. The 10-year peaked. It recently hit 3.11%. There's a lot of naysayers out there talking about doom and gloom that if the 10-year hits 3%, the stock market can't continue to go up. I think it's a little bit overdone at this particular time. I mean, we're seeing some extremes. One of the things I wanted to point out is that a lot of people were worried or are worried that in the indices, in the equity indices, that because everybody's been indexing, that is a bad thing as far as the stock market goes. I can kind of make the case that what's going on in the bond market, there's a lot of exchange-traded funds that are index-oriented, and what ends up happening is that interest rates begin to rise, bond prices go down, and we're seeing some investors sell those indices, and so therefore the bond market may have overreacted much more than it needed to.
All right, let's wrap it up with crude. I don't know about you, but I'm certainly seeing it at the pump for sure.
Yeah, I mean, couldn't come at a worse time. We're going to see gasoline prices continue to accelerate. Crude's been a one-way trade literally for almost the last 18 months. I do believe you're going to see it's going to take time to have some kind of breather. A lot of market pundits are saying, and it's always funny because they talk about linear moves in a particular asset class, and when everybody saw that crude went from 42 to 62 to 72, now everybody's saying it's going to 92 or 100. Right. They usually doesn't happen that way. I would not be surprised to see crude take some kind of breather.
All right. Well, thank you very much for joining us for the monthly RIA segment, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.